Finance News now. Here's Rachel Pupazzoni. So, Rachel, we've seen residential property prices slumping. Is it a similar story in rural Australia?
Yeah, when we talk about residential prices in the capital city, we've seen big falls. We've seen even bigger falls for residential properties in regional parts of Australia. But I wanted to talk today about agricultural land, because we've seen changes in the value of agricultural land as well. And some studies are showing that the heat is set to come off the value of that agricultural land. Now, this is according to Rabobank. A number of drivers which have seen solid growth for farmland are starting to wane. So Rabobank's agricultural analyst Wes Lefroy joins me in the studio to discuss this further. Wes, thanks for coming in. What have conditions been like for the last 5 or so years up to this point?
Rural property prices have been on fire, Rachel, over the last 5 years, with price growth particularly accelerating over the previous 2 years. So we've measured a compound annual growth rate of 7% over the last 5 years at a national level for Australia. And this year is the first year we've launched the Rabobank Farmland Index, and we've measured an increase of 15% during 2018 at a national level, including an increase of 29% in South Australia and also 28% in Western Australia, or the top 2 states.
So that's some pretty impressive growth over the last few years, but we've seen conditions that have led to that are changing. What are those conditions and what's the effect of that?
So during 2018, we saw a divergence in the primary drivers of ag land prices between the drought-affected eastern states, being Victoria, New South Wales and also Queensland, but also the states that have fared slightly better, being the Western Australia, South Australia and to some extent Tasmania. Now, in the drought-affected states, we expect prices will start to plateau, whereas in the states that have fared better, we expect price growth to remain strong, slightly lower than the record price growth that we saw during 2018, but at very strong levels.
Okay, so we've got sort of 2 very different situations. The pullback that we will see for this sort of lower southeastern quarter, will they be sort of similar changes that we've seen in? A lot of people will be able to familiarise themselves with residential capital city house prices. We've seen big falls there. Will the level of falls that we see with agricultural land be on par with those falls?
So I want to make it clear, while we see growth slowing, we're certainly not forecasting a contraction. If we have a look at the macroeconomic forces behind ag land, being the low and falling cost of funds, also the low and falling foreign exchange rate, for example, the macro forces are still quite supportive of ag land prices. So while we expect price growth to plateau, we're not forecasting a contraction.
And agricultural land, we often talk about the impact of the drought, and it's normally a pretty sad and negative story. But when you look at agricultural land clearly or independently as an asset, as an investment, how does it compare to other things that people can invest their money in?
So I think if you talk to any farmer across Australia, corporate investment has played a role in many regions in terms of buying. And if we have a look at how ag land's compared against all other asset classes or alternative asset classes, it's performed extremely well over the last 5 years. So we measured a compound annual growth rate for ag land at 7%. The only alternative asset class that we measured that beat that was S&P ASX 200 Real Estate Investment Trust, which came out at 7.3%. So ag land came out ahead of residential house prices, also came ahead of the S&P 500 index as well. So when we have a look at why investors value ag land, they generally value it because it's not as volatile as other assets, and also the fact that price movements can be different to those other traditional asset classes.
One issue that a lot of people are concerned with is the role of overseas investment. Now, this is a concern for residential properties, but also a concern for agricultural land. What's your study sort of found in terms of how important that is for the sector?
Well, there's been extreme levels of interest, not only within agriculture, but also outside of the sector as well. And a special feature of our report found that agricultural land by area, the level of foreign interest can actually be overstated if you look at it by area alone. So we've actually estimated that only, if you look at agricultural land by value, only 7% has an interest, a foreign interest. Whereas if you look at it by area, 13% of agricultural land across Australia has a foreign interest.
Wes Lefroy from Rabobank, thanks so much for coming in.
Thanks very much.